Hey there. Thank you so much for joining me. I'm Mitch, your host, Mitch Goldberg. Look at that. I am Mitch AF, and you're watching Be the Boss of Your Money. We're talking about money control. The big news today is Apple and Amazon, two of the top five companies, Apple being 8% of the S&P 500, came out with numbers. Amazon looking good. I feel like Amazon has been such an underperformer compared to some of the other large cap tech stocks up. And they had such a good number, blowout number, and raised guidance. Just announced a little while ago that maybe Amazon now could be a new leader because these tech stocks do look like they're getting tired. They look a little tired to me and they need a new leader. And it looks like Amazon could possibly take up that mantle, possibly. But there's a lot to look at, and Apple was, just so. So let's just take a look at these two stocks. I'm going to roll the intro, and I want to answer two questions I got about 529 plans today. I think you should hear the answers. So we talk about personal finance and paying for college as well. It's not just about stocks or investing, it's about financial planning. So we're going to get into that. Let me just roll the intro. Don't go away. We're going to look at the numbers, a little perspective. We have tomorrow's big unemployment numbers. So this is like this is a crazy busy week for statistics and numbers. So here we go. All right, we're back, and I'm going to have the screen already set up for you right here, okay? So NVIDIA was up $2.46 to close at $4.45, down from its high of $4.80. So it's backed off, about $35 in the last week. Amazon well off its high, 146 to 128. We're going to look at that aftermarket. Netflix backed off its high. Google, Microsoft backed off quite a bit from its high, down $40. Meta still hanging around? No. Meta backed off from its high also, and so did Apple. So they all backed off from their highs. But let's toggle over. You see the switch over here? We're going to move it to extended hours. All right, now let's go to extended hours. Amazon is up 9. It's at 138. That's a big help, right? Not far from its 146 high. Microsoft up $1.24, not a big deal. NVIDIA up $1, not a big deal. Google up 16 cents, no big whoop. Meta up a penny. Netflix down 60 cents. So the worst one is Apple. What do you say that Apple is down right now in aftermarket trading? I didn't look. I kid you not. I'm going to say it's down 4. Let's see. Down 267. Okay. So Apple is down 267, 188. Not too far from its high, but people are hoping for a blowout number for Apple. They crushed it on software, on services. They were a little light on. They were very light on iPads. They were a little light on iPhone, which is the most important part of the company. And we'll see what the commentary looks like. We'll see what they have to say going forward. But it was a modest beat, and we needed a bigger beat, and I think we need a big raise in guidance. Amazon, which is up 9 in aftermarket trading, killed it in the cloud. They're doing great, and they raised guidance. So that's a big deal. So it's I don't know if Amazon could go up enough to counteract the declining Apple, because you take these top stocks, they just represent such a big part of the S&P 500. What do they represent? Maybe 20%, right? So without these stocks moving up, it's really tough to get the market going. And they've had big runs this year. Yeah, granted, they had big drops last year, but they did have big runs this year. And like I said, in the last week or so, these large cap tech stocks have been looking really tired. None of them are trading at their year high at the moment. They've all backed off. We'll see what happens. U.S. markets were modestly off, continuing yesterday's downtick after Fitch downgraded U.S. debt. Again, I want to reiterate, I don't think the downgrade by Fitch of the U.S. debt is that big of a deal. I think most people never even heard of Fitch rating, but there's three big rating agencies, the two heavyweights, Moody's and Standard & Poor's, and then there's a little Fitch, all the way below them. Fitch lowered the Treasury debt rating. We're still AA plus. It's not like it's not like the world is ending. This is such a small, it's such a small thing, and maybe it's just a hit to the ego. But stocks were down yesterday, worst day in a couple of months. Today they continued the downtrend, but very modestly. I mean, the Dow is down, as you can see, 0.19%. Nasdaq down 0.1%. S&P off 2.5%. These are such small moves. Oil was up 2.86%, up over $2 because our good friends, the Saudis, Saudi Arabia decided to extend its its volunteer production cut by over 1 million barrels a day. Don't you just love that? We spend all this money defending them, helping them fend off Iran, and here they are just raising, cutting production when the whole world is going through problems right now. Our economy, the U.S. economy, statistics are showing continues to do pretty well. I don't get it when people say, "Oh, the economy is awful." I don't see it. I don't see it around me. I don't see it anecdotally. I'm not saying that you don't see a store that's closed here and there, and there's always somebody hurting. But unemployment is pretty low. We got figures out today. Let me get rid of the screen here. Okay. We got figures out today. The productivity was so strong, even with workers making more money. So go figure, you pay workers a little bit more and they actually become more productive. So that is pretty good for the inflationary scene. That's good for the Fed, gives the Fed a little wiggle room. Tomorrow, though, the unemployment comes out. The non-farm payroll, as reported by the Department of Labor, comes out tomorrow. We'll get the unemployment rate of the country, was how many jobs are created in the government and private sector. We will see average amount of hours worked per week. We'll see average hourly wages per week. And you take all these stats, you put them into one big number, and that'll determine where the market goes. It'll help determine what the Fed does next. It'll help determine if rates could maybe go down or stay where they are. We don't need rates, in my opinion, to go lower for the stock market to go higher. We just need rates to be steady. And I think that will be good enough for the stock market to keep going up. And I want to now answer your some questions about 529 plans. The first one is from a client/friend whose child, I think, is going into, he's either going to 11th or 12th grade. And I think 11th grade. And the parents have some cash on the sideline and they want to put it into the child's 529 plan. It's a good amount. It's like, it's $50,000. It's a good amount to throw into the 529 plan because it's for college, right? But just because it's for college doesn't mean you have to put it into the 529 plan. I said a couple of things. First, if you know you're going to spend the money if it's in your checking account, and you know you have to put it into the 529 plan to like get it out of your head so you're not going to spend it, then go ahead and do it. The 529 plan money, if you put money into a 529 plan, it won't change your financial aid eligibility with FAFSA. Because whether if the money's in the parent's name in their checking account, savings account, or in a CD, or in the 529 plan with the child as a beneficiary, or even with the child as the owner and in a custodial account that was moved into a 529 plan, it's still considered the parent's asset. So it's like a 5% hit to financial aid for the amount that's in the account, but it's it would be a lot worse if it was in the child's name in a custodial account. So I told them, do not put the money into a custodial account like an UTMA or an UGMA account, because that money will be counted as a child's money, and that will be a much stiffer penalty as far as FAFSA goes, as far as how much the child can get for financial aid. Why do that right at the finish line, right? The other thing to know about this is that 529 plans are really long-term endeavors. You're supposed to invest in the child's name when they're young. give them time to make money in the stock market, to get past up and downs, the volatility of the stock market. And as they get closer to high school graduation, the accounts become gradually more conservative as far as their weightings go. They become less stocks, more bonds, more short-term bonds, more cash, money markets, that sort of thing, more stable assets. And you pay fees for that. So why take money that you're not paying fees on, put it into a 529 plan that you are paying fees, even if it's a low fee 529 plan, and then you have to put it into their money market, which is probably not going to be a good money market. You could say stable value fund or whatever, but you're taking maybe you're taking more risk than you want to, and they're not paying that much either. You could just leave the money in your name, in the parent's name, put the money into a 1 year or 2 year CD to time it, with the expiration of the CD, the maturity of the CD, or a T-bill to go along with when you're going to need the money for your child's college education. And I think you'll do a lot better that way. So I don't really see the point of putting money, that kind of money, into a 529 plan so late in the game. And even if they're going to go to graduate school, I still don't think you have enough time. And that's if, maybe, might, possibly go to grad school. You don't know. How do you know if your 11th grader is going to go to grad school? Some of you know, like if your kid wants to be a doctor and that kid's determined to be a doctor or a lawyer, that's a different story. But most kids don't know if they're going to grad school in 11th grade. They might think they know, but they don't know. Okay, so the other thing with a 529 plan is asset protection. Is a 529 plan shielded from creditors and a lawsuit or personal bankruptcy? I can't answer this for every state, but I do want to give the answer for the state of New York. Okay. New York, a 529 plan, I'm looking at my notes here, is protected from creditor claims against the owners, against the parents, only while the child is a minor. When the child becomes of majority 21 in the state of New York, the money is no longer protected from creditors. And if you are worried about that and there's a problem and you move your money into your child's 529 plan when they're under 21, that could be considered a fraudulent transfer. The idea is to have your asset protection ducks in a row so that when you are faced with a problem, a lawsuit, creditor problem, you've already taken the steps before that. You've pre-planned it. Because if you take the steps after, it's considered a fraud. It could be considered a fraudulent transfer. Now, I don't give legal advice. You have to consult with your lawyer, your attorney, right? But as an ancillary part of what I do have to talk about some of these things because people ask me. So it's always advisable to speak with your attorney when it comes to matters of asset protection, and don't take your advice on that kind of thing from your financial advisor who is not qualified to give you legal advice. And that's it. That's the show for today. When you next see me here, I'll probably will not go live tomorrow. I usually don't go live on Fridays unless something real calamitous happens in the stock market. But the next time you see me next week, I will have a whole new backdrop in the studio, whole new soundproofing, acoustic treatments all over, and I can't wait. So we're gonna have a nice new look, and then I get to start working on the kind of lighting. I'm using all the stuff from my old office setup, but it's just not working for me anymore. All right. Have a great day, and I hope you all have a lovely evening. And we'll see what those unemployment figures look like. I have a radio show if you're in Suffolk County, New York, 103.9 FM every day at 9:06 a.m. And I'll be going through the numbers on the show as well. All right, guys, have a great time. Thank you so much for watching. And if you wouldn't mind, give us a thumbs up or some reaction and say hello. So this way your friends all will see what's going on. I see Stacy out there. I see Tina out there. Thanks, guys. You two are so supportive. Means a lot to me. All right. Bye.